Hello friends, I am Devash from HDFC Securities, and agenda for this video is that first I will take you through the key developments and how indices have performed over the last 1 week and last 1 month. Then after that my colleague Subhash will share market outlook from technical perspective, and after that Siddharth will come and share his insights from derivatives. So without further ado, let's directly get into the key developments. International markets trended lower. Intensified fears over rising interest rates push S&P 500 index lower for the second consecutive week and to the level last seen in early November. The release of December policy meeting statement on a Wednesday afternoon, followed by the Fed chairman's speech, sent stocks across the world lower. The ECB raised interest rates and the Bank of England also raised interest rate this week. So the FOMC, ECB and BOE continue to increase the interest rates to fight the higher inflation. World Bank and IMF expressed concerns over worsening economic outlook. Let's look at the various asset classes and how they have performed. So the dollar index has fallen from 114 as we expected, and now it has come back to the important support, and from here it can bounce back. So that means that the Indian rupee can also depreciate. We may see rupee breaching 83, 83.50 levels and heads towards all-time low next week. In international markets, as I pointed out, S&P 500 traded lower in the last fortnight. The Nasdaq also broke the intermediate support and it has fallen. So international markets are weak. Crude oil also continued to trade near 75 levels. Compared to the other commodities, base metals are looking stronger. After a brief correction, copper has rebounded. Bitcoin continued to struggle near 16,000 levels. Let's look at the how indices have performed. So as you can see from the screen, over the last 1 month, the international markets, especially the American markets, have gone down. Only the Hang Seng has gone up in last 1 month. Same is the case with the last fortnight. Most of the markets around the world have corrected, especially the American markets are down between 4 to 6%. Hang Seng continue to outperform. This is on back of the China's reopening. So after the very strict COVID restriction, China is opening up, and that's why Hong Kong markets have started outperforming. Indian markets, as we expected, there was a small correction. Indices are down about 2.5% over the last fortnight. As we expected and mentioned in our last fortnightly video, the mid cap and small cap continue to outperform the Sensex. The smaller the stock, the better the performance. So compared to 2.5% fall in the Sensex and Nifty, small cap index is down just by 0.6%. Let's look at how various sectors have performed. So the capital goods and FMCG actually outperformed the Nifty. So IT and real estate were the key underperforming sectors for the last fortnight. Power, IT, and consumer durable were the weakest sectors, while capital goods, PSU, and FMCG have done well over the last 1 month. So the economic calendar is quite light. Nothing important is scheduled to be released next week. And after that, from December 25th, there will be very light movement in the market. Most of the developed markets will be observing the Christmas holidays. Now let's see what charts are foretelling. Over to you, Subhash.
Good morning, everyone. This is Subhash, Senior Technical and Derivative Analyst at HDFC Securities. So today I'll be talking about the market outlook based on technical analysis for the next 1 to 2 weeks. Carrying on from last week, markets corrected further this week. The week began with the Nifty witnessing a pullback rally for 3 sessions before finding resistance near the previous swing high of 18,668. The sell-off that followed in the next 2 sessions saw the Nifty breaking the crucial support of 18,442 and also close below the 20-day SMA. It was the second consecutive week of losses for the Nifty. Market breadth was, however, positive in 3 out of the 5 sessions of the week, which was probably due to the pullback rally witnessed from Monday to Wednesday. Technical indicators are, however, weak as the 14-day RSI is in decline mode and at 44.47 is not yet oversold, which suggests that there is potential for more downsides. While the intermediate trend is still firmly up, Nifty is now in a short-term downtrend as it has broken its recent lows of 18,345 and is now headed towards the previous swing lows of 18,133. As you can see on the daily chart here, Nifty has been making lower tops over the last few weeks. And on Friday, it broke below the previous low of 18,345, also closed below the 20-day SMA. So the pattern is looking negative, and we could be headed towards the 50-day SMA, which is currently at 18,081. Weekly chart, however, shows that intermediate trend is still up, and this correction is likely to be more of a short-term nature. Coming to the sectors, barring the Nifty PSU banking index, all the sectoral indices ended lower this week. Top losers and underperformers were the Nifty Media, FMCG, Realty, IT, and Pharma indices. On the daily charts, most of the indices are in short-term downtrend and could therefore fall more in the near term. For example, if we look at the Bank Nifty, Auto, Energy, Infra, IT, and Pharma indices, we can see that all of them are in short-term downtrend. Pharma index has actually broken its recent support of 12,687 and is also below the 20 and 50-day SMA, so could therefore continue to underperform in the near term. As you can see on the chart here, it has broken the previous low and also below the key moving averages. Infra index has also broken the previous low and closed below the 20-day SMA. 14-day RSI 2 is in decline mode and still not yet in oversold territory. Similar story we can see in the auto index. It has corrected on Friday and broken the recent low and also below the key moving averages. So coming to the outlook, Nifty remains in an intermediate uptrend, but with the short-term trend down, we could see more downsides in the near term. Our immediate downside targets are the recent swing lows of 18,133 and 18,081, which corresponds to the 50-day SMA. We expect further selling across many sectors to push the Nifty index lower in the coming 1 to 2 weeks. Broad market indices like Nifty Mid Cap and Small Cap displayed a mixed performance this week, with losses of 1.13% and gains of 0.48% respectively. Both the indices nevertheless outperformed the Nifty. We expect the broad market to continue its outperformance as they may fall less compared to the Nifty index in the coming 1 to 2 weeks. So one could look at stock-specific opportunities in these segments. Coming to the conclusion, we expect the markets to fall more in the near term as the short-term trend is down. Downside targets for Nifty are at 18,133 and 18,081. With most of the sectoral indices in short-term downtrend, this increases the probability of a further correction in the markets. Current short-term downtrend would reverse if the resistance of 18,450 is taken out. Recommend a go slow approach on fresh longs till we see signs of strength emerging.
Thanks, Subhash. Now, Siddharth will share market outlook from derivatives perspective. Over to you, Siddharth.
Welcome to Derivative Outlook on 17 December 2022. I will be covering derivative part today, mainly in Nifty Future, Bank Nifty Future and some sectoral indices. Let's start. This is a Nifty Future last week chart where we can see in the initial days Nifty has gradually increased and formed a top near 18,800 level. From that level, it has corrected almost 300 to 400 points and formed a bottom near 18,330 level. In that period, open interest has increased gradually with a fall in prices suggesting a build-up of short position. IV has also risen marginally to 12.33 level, and PCR is heading towards its oversold region of 0.75 to 0.65 level. We are seeing Bank Nifty chart of last week. In the initial days, Bank Nifty has gradually increased and formed top near 44,200 level. From that level, it has almost corrected by 800 points and closed near 43,314 level with a fall in open interest, suggesting a long unwinding. In that period, IV has remained between 13 to 14 levels, so there is no major change in the premium. PCR is at currently 0.76 level. 0.65 to 0.75 is supposed to be oversold region. In Nifty option data analysis, we can see a call rating between 18,400 to 18,600, suggesting resistance around that level, whereas 18,000 to 18,300 has a maximum put rating suggesting a support around that level in the near term. If Nifty sustains below 18,300 level, then we may see Nifty heading towards 18,100 level followed by 18,000 level. This is a Bank Nifty data analysis level. We have seen 43,400 to 44,000 where the maximum call rating is already happened, suggesting resistance around that level in the near term. And on the put side, 43,000 to 43,200 suggesting a support around that level in the near term where the maximum put rating is already happened. If the Bank Nifty breaches 43,000 level in the coming session, then there is a possibility that Bank Nifty may head towards 43,200 level. This is a sectoral open interest data analysis. On the x-axis, we are seeing change in the price. On the y-axis, we are seeing change in open interest. In that, banking and oil and gas has suggested a buildup of long position, whereas index, chemical, pharma, textile, infrastructure suggesting a buildup of short position, and cement, real estate, and metal suggesting a long unwinding of the positions. This is hitmap of last 1 week. We have seen short buildup of position in the Metropolis, Lalpat Lab Page Industry, whereas long unwinding was seen in Bale, Concor, Cummins, Escort. Long buildup was seen in Gale, Balrampur Chini, Idea, and short covering was seen in RBL, PL, and MCX. Outlook for Nifty, Bank Nifty, and sectors for the coming fortnight. Long unwinding was seen in Nifty future where over the week period with the highest put option near 18,100 level suggesting a support around that level in the near term, whereas call rating was seen around 18,500 to 18,600 level suggesting a resistance around that level. If in coming sessions Nifty breaches that 18,300 level, then we may see Nifty heading towards 18,100 level gradually. Outlook for the Bank Nifty. Long unwinding was also seen in Bank Nifty future, whereas put rating is seen around 43,000 level suggesting a support around that level. If Bank Nifty breaches 43,000 level in coming session, then we may see Bank Nifty heading towards 42,000 level where the maximum put rating is happen. Next is around call rating is around 44,000 level suggesting a resistance around that level in the near term. In sectorial, bank and oil and gas may see outperformance against Nifty in the coming session.
Thank you, Siddharth. So let's conclude. So markets are experiencing a routine correction. We feel that short-term traders should turn bullish on Nifty only when it is managed to crosses 18,450 hurdle. Nifty support comes in at between 18,130 to 1880 range. When we look at the broader market, smaller and mid-cap stocks will continue to outperform. The breadth indicators are still positive. We feel that the banking, telecom, and oil and gas are relatively strong and they should outperform the Nifty. And the environment is still conducive for stock pickers. So focus on picking the right stock, and there is still money to be made in this market. That's all for this video. We hope you like this video and find the information provided useful. If you have any comments or suggestions, do reach out to us. Thank you.